It is almost 11 a.m. in Singapore and Shanghai. Welcome to Bloomberg Markets Asia. I'm Haslinda Amin. Here are the top stories. Equity markets in Asia failed to join in on the optimism around the Fed that drove the S&P 500 to another record high. Regional central banks are watching the Fed's plans closely. We speak exclusively to the Assistant Governor of the Thai Central Bank, P.T. Diashatat, on their outlook. And in India, a key opposition leader has been arrested by the Federal Anti-Money Laundering Agency just weeks before the national elections. And Indonesian stocks have been on a stellar run, but can the new president's spending plans dent that rally? Schroders, Indonesia's CIO, will be joining us to discuss that. Well, let's do a check-in on how markets are faring today. April, we have the S&P posting a 20th time of record highs, yet lackluster in Asia.
Yeah, this was always going to be a pivotal week for central banks and markets, Has. Half of the world's economy setting monetary policy. We thought we got through the BOJ and the Fed. Then in the past 24 hours ago, we got those surprises from the Swiss, the Turkish, the Taiwan central banks. To top it off, we have the PBOC setting the yuan fix above 710 for the first time in about 2 weeks. So that's spooking yuan traders as well. And here we hear about the geopolitics of it all. Chinese chip maker SMIC also potentially in the crosshairs of US authorities. Couple that with speedier inflation print out of Japan, raising the question, are we going to see another hike from the BOJ? And then US economic data showing us strong economy. Where do we go from here on the Fed? So there's not a lot of risk appetite coming through today.
And where do we go from here for the CSI 300? It does seem like that gloomy sentiment persisting.
Absolutely. I mean, we saw it actually rebounding since the latter part of this last month. And this was from a 5-year low. Traders more or less looking past what was really uninspiring NPC. But it's really failing to breach that key resistance 200-day moving average level now. So for that to happen, it either has to see strong stimulus coming out from Beijing or sustained inflows for the markets, neither of which look to be very likely. So to answer your question, doesn't look like we'll see that rebound so soon.
All right, let's go where we go from here. Avril Hung, thank you. It's been a busy week for global central banks. The Bank of Japan started off by exiting its negative rate strategy, plus dovish holds at the Fed and the Bank of England and the Swiss central bank with a surprise rate cut suggesting the world might have turned a corner in the fight against inflation. And zooming in on Southeast Asia, Bank Indonesia earlier this week repeating its plan for an extended pause to help maintain stability in the rupiah after Malaysia also held rates. We'll get rate decisions from the Philippines and Thailand in the coming weeks. Now, the Bank of Thailand contending with not just a shrinking economy, but also intense political pressure from Prime Minister Srettha Thavisin for an urgent rate cut. Well, for more on the Bank of Thailand's plans, joining us now exclusively is P.T. Diashatat, Assistant Governor of the Bank of Thailand. P.T., good to have you with us. We know that core inflation is easing, and we have an economy that's pretty lackluster. Growth was about, I think, 1.9% last year. You have every reason to be cutting rates.
So good morning, Haslinda. Thank you for having me back. Yes, actually, we've had a slower recovery last year than many people, including us, expected. We pretty much had back in February, we anticipated the softness in the last quarter of last year already, and the numbers came out pretty much roughly in line. But since then, I would say that the incoming data the last couple of months has actually been in line with what we had expected back in February. So consumption continues to grow at a more moderate pace. Tourists has actually, both in the numbers and the spending, has been a bit higher than we anticipated. And the manufacturing sector has actually kind of flattened out. The decline that we have seen for a long time has actually seemed to have leveled off, which is a good sign. On the export front, that's still sluggish, I would say, but recovering. And the big gap is actually the fiscal spending from the delayed budget. This has been a rather big drag, both in the last quarter of last year and the first quarter this year. I would say together, 2 quarters together, the drag is about 0.8% of GDP compared to normal. So it's quite a significant drag. But overall, I think the economic picture is what we had anticipated back in February.
Can that pave the way for you to cut rates in April? When you take a look at the markets, they're pricing in big bets that you'll be cutting rates. If you take a look, 10-year yields down 80 basis points since that peak we saw in October. The sentiment out there is that you will be cutting. What do you make of that?
Well, actually, our reading is that the market is split. It's not completely unanimous. And actually, I would say the context is important, right? So in the broad context, we went through a soft patch in the second half of last year. That was partly due to cyclical factors, for example, the delayed recovery in the global electronic cycle, but also partly some structural factors, that meant that we did not benefit as much as we could have from the uptick in, say, external demand. But looking forward, we actually expect that softness has passed, and in the near term, there is actually a cyclical pickup in growth. If you look at the guidance that we gave for this year, 2.5% to 3% of growth. Behind that numbers, if you look at the quarter-on-quarter momentum, it's actually around 1% on average for the whole year, even if you come in the bottom range of that. So that's an annualized rate around 4% for the year. The momentum that we and most other houses expect is actually not that bad. The year-on-year figures may come in low because of the base effects from last year. So what the MPC will be doing at this next meeting will be assessing the durability of this pickup in near-term growth momentum, and that depends on how strong the cyclical drivers are and how big the structural drags are going to be. So I think that's the main question in terms of the policy decision.
Given what you're seeing right now and given the growth that you're talking about, is it reasonable to think that you can maintain that neutral rate of 2.5%? Does anything change that target?
Yeah, so I mean, the committee aims to be broadly neutral given where we are in the overall macro picture. And, broadly neutral is a very, not an exact estimation to have, right? It is true that there seems to be a slower trend growth than we had anticipated, maybe, looking back a year or 2 years ago. So that would figure in whether there is a need or not to recalibrate the neutral stance. But that depends also on the strength, as I said, of the cyclical recovery that we are seeing coming in at least in the first half of this year. So the first question is to decide whether there is actually a need to recalibrate neutral. And if there is one, then the timing is the second issue, what would be the appropriate timing of the recalibration. So I would say it's hard to prejudge the decision right now, but whatever is being considered is more like a recalibration rather than an easing cycle to support the economy, because the economy is actually recovering, as I said, right. Especially in the first half of this year.
Khun Piri, is no secret the Prime Minister wants you to cut rates. In fact, he says you should call for an emergency meeting. How are you responding to that pressure from the Prime Minister?
Yeah, as I've said, I mean, we've had a very constructive dialogue with all parties, including, the Prime Minister, the fiscal, all those parties in the government. We do listen to all the inputs, appreciate those inputs. It's a judgment that needs to, consider quite a big set of factors, both in the short run and long run, as well as, the distributional consequences of our decisions. So I think that input is useful and valued. We have been talking about that, but I think everybody understands that we just want to deliver on our mandate of price stability, sustainable growth, and financial stability. And everybody respects the operational independence that we have in terms of the monetary policy setting.
Khun Piti, I want to touch on the Thai baht, like lost the performance, second worst performer in Asia year to date, and that's mainly because of the outflow of funds. How are you looking at the Thai baht? Are you concerned about the weakness?
Yeah, it has been a very short year so far. So yes, we have had some weakness. We are roughly at a level we had been back in September last year. So it goes up and down. In the last couple of months, the dollar had strengthened a little bit. That made us weaker. But we also had some domestic Thai-specific factors. Basically, the GDP numbers, for example, came in soft. That was partly the reason why we had more softness than other countries. But as you're looking forward, I think it's important to note that for us, and actually for many countries in Asia, the current level of policy interest rates are closer to neutral than, say, in many advanced economies, including the Fed. So if you look forward, the likelihood of policy adjustment for the Fed would be a lot bigger than countries in Asia, including Thailand. So I think on that front, and also given the the recovery that is projected, I think there is some support for the baht going forward. And the fund flows have been negative last year, quite substantial. So far, the first couple of months has also been negative outflows. But I think we have to take a bit more medium-term view of the currency.
So, Khun Piti, are you then saying that you're waiting on the Fed, that movements by the Fed later in the year would perhaps cause some weakness in the dollar and hence support your currency? Is that what you're waiting for?
I'm not waiting for that. Just saying, in terms of looking forward, the factors that could influence currency in the region, and including the baht, it is an important point that our starting point in terms of policy is quite different. Being closer to neutral means rates are likely to stay here, or not far off from where they are right now, so that if the advanced economies start cutting rates as is expected, the differential will be a bit less. That at the margin would be a supporting factor, but that's not a main consideration for us. The currency has not posed a particular problem in terms of stability or in terms of growth. It's helpful a little bit on the inflation front. So I would say that there's no big policy issue in terms of currency level right now.
What's the biggest risk to all your projections that you've made today?
Well, one big risk is actually we hope the budget disbursement. The budget has been delayed for around 2 quarters, and it's expected to come in line in April. So there'll be some makeup, particularly in the investment, public investment, and the risk is that the execution of having to make up or backload those spending in the scale that is required. Whether that can be implemented as much as forecasted. So that's one big factor. And I think in terms of the global picture, it actually seems a bit more positive than say last meeting.
Right.
So I would say that would be the main factor.
Khun Piti, always a pleasure to have you on the show. Bank of Thailand Assistant Governor Piti Diashtat there, joining us from Bangkok. Let's get a quick reaction on the outlook for the Thai baht with Eugenia Victorino, head of Asia strategy at SEB. What do you think? Can it be well supported at the end of the year?
Well, considering that the Fed is still likely to cut, whether or not it comes before the BOT cut or the other central banks, it's still going to cut, and that's going to allow currencies like the Thai baht to recover. But really, at this point, we're looking at the lack of tourist flows. The assistant governor has said that there has been a disappointment in the tourist flows, and that's really the one that's dampening the recovery in the Thai baht. So having said that, we still expect the Thai baht to recover towards 34, assuming that the Fed does deliver on the 3 cuts.
Yeah, that's a big question mark, Eugenia. Stand pat, please. Eugenia Victorino, SEB, sticking around, and we'll have more to discuss with her, including her views on the Fed and the outlook for China. Keep it here with us. This is Bloomberg.
My sense is still that the Fed is itchy fingers to start cutting rates, and I don't fully get it. We've got unemployment, if anything, below what they think is full capacity. We've got inflation, clearly even in their forecast for the next 2 years, above target. We've got GDP growth rising, if anything, faster than potential. We have financial conditions, the holistic measure of monetary policy, at a very loose level. I don't know why we're in such a hurry to be talking about moving towards the accelerator.
Former U.S. Treasury Secretary and BTV contributor Larry Summers on the Fed. Let's bring back Eugenia Victorino, head of Asia strategy at SEB, who thinks market pricing for Fed cuts is close in line with Fed forecasts for now. First off, reaction to Summers. She said, you know what? No itchy fingers. Don't be in a hurry to cut rates.
Well, there is reason not to be in a hurry, because at the end of the day, that is what the Fed is saying. They are not in a hurry. It's only 3 cuts. And even if they do cut by 3 times this year, it's still higher than where we started. But I think what's we're looking at is where is the potential growth in the U.S. Because how much lower can the interest rates go from here? But at this point, the market can only focus on the 3 cuts this year. Because after all, we are in an election year.
It is higher for longer. We talk about 3 cuts this year, but in 2025, they actually factored in fewer cuts.
Exactly. And actually, when you talk about the geopolitical risks that could muddle the discussion later on, they may not be able to cut further in 2025 because there could be new drivers of inflation, and that would really be driven by U.S. industrial policy or maybe even trade policy. But nobody's talking about that now because the focus is on the Fed cutting 3 times.
USD exceptionalism up 2%, well, dollar index up 2% year to date. That is set to persist.
Well, I think that's already at its last legs, and it's only a question of which central bank will be cutting first. But yesterday's surprise move from Switzerland has already told us that the page has turned as far as the inflation story goes for the developed markets, at least for most of the developed markets. So it's just a question of which one would be next. It's possibly the RBNZ. Maybe the Fed will be able to hold off until June or July, but whether it's June or July, it's 3 cuts, right? But the others, will the market be changing their expectation of the timing of the cuts for the ECB? That's where the strength of the dollar becomes murky. But at this point, nothing is changing the narrative. The U.S. economy is resilient. Therefore, even with the cuts, the dollar is still outperforming.
So how do you play FX? Which are the most compelling crosses right now?
I think take out the dollar in the equation because the timing really makes it difficult. But as I already mentioned, the RBNZ, I think, is the clear line to cut, whereas if you play the antipodian policy divergence, then I would go for going long Aussie Kiwi because the Aussie, while it is marginally less hawkish, it's out hawking the RBNZ, and that is a very clear policy divergence in my view.
It wasn't too long ago when the yuan played a huge part in the direction of Asian currencies, but the yuan has been pretty stable. The PBOC has supported it in a huge way. Does it play any part at all? If not, then what are the guiding factors for Asian currencies right now?
So as you mentioned, the volatility in the yuan has been dampened so much. These days, the traders get excited to go from 721 to 722, but then in reality, that's very little volatility. So the Asian currencies are not able to take their cue from the yuan. And that's why any changes from the dollar leads to an outsized reaction in the Asian currencies, as we have seen just today. We have seen an increase or a gain in the dollar, and we've seen outsized reaction from the won and the Thai baht, even though the yuan is still historically quite stable.
We have to talk about the yen. Oh, wow. 151 came close to 152, which is on the cusp of the 1990 levels that we saw, the lowest level since. And yet nothing from anyone.
And that's exactly the interesting part, right? Because everyone's talking about when will they intervene, when will they do the mic drop on the banks, but we're not seeing. I mean, we're seeing some jawboning about them looking with urgency, but that's about it. At the end of the day, it's not yen depreciation. It's really a dollar strength. But I think when we're looking at 3 cuts from the Fed, and the BOJ will probably be hiking one more, I think in July, it's still a Fed-driven narrative. So in the near term, we're going to be driven by dollar moves in the dollar-yen rather than yen moves. But 152, maybe we'll be hearing more from the policymakers.
But could it be that there is a new threshold now that the BOJ has made an exit from negative rates, made an exit from YCC? Is there a new threshold?
I would say, like, right now we're seeing an extended rally in the dollar, which has been unexpected. But I think for most of the central banks in the region, there seems to be more acceptance of maybe another leg of dollar strength, because at the end of the day, the Fed will cut. But I think if the yen were to continue to remain weak until the end of this year, even with Fed cuts, BOJ may actually start thinking about QT.
151 and change. Eugenia, thank you. Eugenia Victorino, Head of Asia Strategy at SEB. Still to come, the world's most lucrative cricket tournament kicks off in India today, giving investors another chance to cash in on the game. We have details just ahead. Keep it here with us. This is Bloomberg. You're looking at pictures from yesterday of Apple CEO Tim Cook opening the company's new store in Shanghai. Also with him is Didier O'Brien, Apple's Senior Vice President of Retail. The visit signals the tech giant's commitment to China, even as iPhone sales in the country slumped 24% over the first 6 weeks of this year. Meanwhile, Apple shares dropping sharply overnight amid scrutiny from regulators on both sides of the Atlantic. In the US, the Justice Department is suing the iPhone maker for violating antitrust laws. And in Europe, the company is said to be facing investigations about whether it's complying with the region's Digital Markets Act. Apple erased about $113 billion in value overnight. Let's do a check on Apple suppliers here in Asia. That includes the likes of Hon Hai, TSMC, Sunny Optical. It is a mixed picture. Hon Hai down about 1%. TSMC, negative territory, along with Sunny Optical, down a massive 9.5% right now. AAC Technologies up by 6.8%. China, of course, a big market for Apple. It contributes to 20% of its revenue. Today, though, overall, the broad picture is a down day despite the S&P closing at yet another record high. HSI down 2.7%. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. China markets just heading to lunch, and we're seeing the CSI 300 index under pressure. In fact, it is trading at the lowest level today, down about 1.5%. China shares hitting pretty much a critical juncture. CSI 300 index down more than 50% from that 5-year lows. We're seeing fund redemption, some correction recently, but not enough for that rally to continue. We're also keeping an eye on the yuan, the Chinese currency, down 0.3% versus the USD. It is at the lowest level in about 4 months. There's a sense out there that perhaps the PBOC is comfortable with the weakness in the currency. Again, The CSI down about 1.5%. The yuan also under pressure versus the USD down to a 4-month low. As we come down to the open in Japan, which is coming back from lunch, just took a check on how the Nikkei 225 is doing at this point in time. It is just slightly in the positive on a day that Asian benchmarks are under a lot of pressure now. The Nikkei 225 in negative territory as it comes back from lunch. Front and center, of course, the currency, the yen, it is at 151 versus the USD. It did come close to that 152 level, the lowest level we've seen since 1990, despite what we saw the BOJ do, which is exit negative rates as well as YCC. The Nikkei 225 slightly in negative territory, topics up by 0.3%. Now, currency also a concern for Indonesia's central bank. Let's do a check-in on how it is doing. Avril Hong is with that. Avril.
Yeah, Has. Let's take a look at how the rupiah has been faring, because for Bank Indonesia, the policy moves have always been in defense of the currency. We saw it hold this week as expected, opting instead to ease access to credit to spur the economy. And we saw the Fed signals helping the rupiah strengthen. But today, given what we're seeing on the dollar, what we're seeing in risk off, the rupiah is back to weakness. We're also seeing the Jakarta composite pull even further away from the record highs that it reached earlier in the month of 73.73. Let's flip the board and take a look at Indonesia bonds as well, because we are in the midst of a political transition. There are concerns about the fiscal outlook given those election pledges, given what could turn out to be a spending spree. And amid all that, if you take a look at how Indonesia bond flows have been faring since the election, there have been more foreign outflows than inflows. So it looks like international investors are a bit spooked by what could turn out to be a concerning fiscal outlook for the country.
That's right. Let's dive on that, Avril. Our next guest believes Indonesia's fixed income fundamentals remain sound. Let's bring in Irwanti, CIO at Schroders Indonesia, which manages funds aggregating about $5 billion. Irwanti, good to see you again. First off, we have confirmation that Prabowo will be the next president, but most certainly there will be some people up in arms, likely to be contested. Do you think that will weigh on sentiment?
Yes, that will bring some small sentiments, but I don't think it's fundamental or structural, and that won't bring too much impact to the market, because I think the result has been quite obvious and the gap is quite significant. Hence, we don't think there will be changes in the result. There will be some protests here and there, but it won't be anything significant, Haslinda.
Yeah, but you got to consider as well the risks from his cabinet. We've yet to see how that may look. We don't know yet who the finance minister is likely to be. We don't know for sure what his policies will look like as well. So aren't there risks to that optimism you're expressing?
That's true. That's why it's very important. There's a lot of expectation coming from investors, local and also foreign, that the new cabinet will be maintained more coming from the professionals. Those are very important, and we are still waiting whether the new finance ministers are the ones that will be very well accepted by the market. But I think it's the key coming from the new government that they show the new cabinet lineup will be coming from professional and technocrats.
So how's that guiding your portfolio? How's that guiding where you're putting your money?
It is clear, regardless of the cabinet or policy, that the new government policy will be more pro-growth. That's why there is an expectation that they will revisit the fiscal deficit, and most likely it will be higher. So that implies that there's more optimism in the equity market rather than the fixed income, as the previous government has been opting more towards stability over growth. And we are expecting pivoting coming from the new government, that they will focus more on growth rather than stability. So that's why if you look at the foreign inflows and outflow, we are seeing outflows from the fixed income market year to date. But on the contrary, we are seeing quite a significant inflows going into our equity market this year. So we expect this will continue, the trend will continue going forward, and we are all waiting whether the fiscal deficit will be lifted to what level going forward.
So if you're expecting the trend to continue, do you take money out of Indonesia's bond market and put it into the equity market? Is that the strategy to adopt right now?
It doesn't necessarily so, Haslinda. We think that the current valuation of government bond yield still remains to be favorable. If you look at the 10-year bond yield, the real yield right now is still almost 4%, and it is still one of the highest across all the emerging market fixed income bonds. So on the valuation side, yes, there is a downside risk if the government decided to pivot on the fiscal deficit and the growth policy. But valuation-wise, we are still one of the most attractive compared to the other emerging market basket.
When it comes to the bond market, though, Irwanti, people say there are better alternatives like Korea, like India. Why put money in Indonesia where there's still a lot of uncertainties, the risk is higher?
Well, if you look at the government debt to GDP ratio, we are still one of the lowest. So my thinking is, even though we're lifting our fiscal deficit, it doesn't mean that our fiscal macro balances will deteriorate. We are still one of the lowest debt to GDP growth. And I think it's still premature to expect that the new government will do irrational spending or they will lift up the fiscal deficit to a very risky level. We are still in the expectation or base case scenario that the fiscal deficit will be only lifted slightly compared to the current level. So it is still very premature to expect that the government will do aggressive spending policy going forward. And I think the governance of the spending is the key. If the government spend it to a productive spending, if the governance can be accountable, then it's actually a good story for Indonesia market going forward.
Irwanti, just one final question on the rupiah. Where do you see it headed? We know that the BI, Bank of Indonesia, is waiting on the Fed. What do you see the BI doing, and what do you see the rupiah doing?
Well, unfortunately, it is more of a US dollar strength right now. So I don't think BI will do any action before the Fed is confirmed that they will cut rates. So our base case scenario is BI will not do anything until BI start cutting rates, which is it will be during the second half of this year. And if you look at the recent trajectory of inflation, there is a little bit of pressure of inflation coming back. So the disinflation has been quite delayed. So I don't think BI will do anything until they are sure that the global inflation will come down and the Fed will start be cutting rates, which won't be until the second half of this year.
Irwanti, CIO at Schroders Indonesia, we thank you so much for being with us today. Now, here's a look at where the major central banks stand in Southeast Asia, both Malaysia and Indonesia, holding on to rate moves with this month. We're set to get decisions from the Philippines as well as Thailand in the coming weeks. And earlier we heard from Bank of Thailand Deputy Governor Piti Diastad.
Looking forward, we actually expect that softness has passed, and in the near term, there is actually a cyclical pickup in growth. The momentum that we and most other houses expect is actually not that bad. So what the MPC will be doing at this next meeting will be assessing the durability of this pickup in near-term growth momentum.
Meantime, BlackRock's Philip Hildebrand thinks Switzerland's surprise rate cut is a signal that the world has turned a corner in the battle against inflation. Speaking exclusively with Bloomberg, the former SNB president explains why the Swiss Central Bank decided to move now.
We've been waiting for this for a long time. The market has been pricing it and had to come off, and now basically, the first one is out of the gates. Not surprisingly that it's the SNB, in the sense that Switzerland had by far the best inflation record through this difficult period of the pandemic. So it's a courageous step, but perfectly justifiable when you look at the inflation forecast and the inflation data these last couple of years.
So what does a policy mistake look like, not from SNB, but also for others? Is there a danger that actually if you cut too quickly, then inflation actually is rampant under control, and so it makes your job double harder to get on top of that?
I think the main challenge they face, all the central banks effectively, and certainly the Fed, is that goods inflation continues to come down. That's the post-pandemic adjustment. That will settle at roughly zero, which is where typically historically goods inflation is. What is not going to happen, in my view, is service inflation is not going to come down. We have very strong labor markets. Wages are strong. And so my guess is service inflation is going to turn out to be sticky when it settles. And in combination between goods at zero and service inflation somewhere around 3%, let's say, that suggests to me that what we're going to end up with a kind of a rate that is going to be higher. And so I think what you're going to see is a higher for longer story that will ultimately kind of feed through the, the short-term adjustment of rates now beginning to ease, policy rates beginning to ease.
Philip, for many years you were, of course, in charge of the S&B. We're now looking at live pictures of Thomas Jordan speaking to report. I know that room very well, gathered there to try and understand the path forward. He's also said he will step down. What's the intricacies on I guess, the complexities of just managing the Swiss economy right now?
Well, I think that, just keeping the track record of the S&B, the legacy of Thomas, of course, is that he has the best inflation track record of any central bank. And so I think that's the principal challenge going forward, to make sure that there's no question that credibility on inflation will be maintained. And then in the longer term, the question will be, and that's partly an S&B question, but more a regulatory question, how do you deal with a bank that is going to be very, very large compared to GDP? And that's, of course, the legacy, in a sense, of the failure of Credit Suisse. So those will be the main challenges going forward, I'd say, for his successor.
But would he be worried about market reaction right now? So
no, I don't think so. I think he's, they've known
how the markets will react.
They know how to surprise markets. They've done that before. As I said, I think he could certainly perfectly justify the decision today. He could have also waited. But in a sense, when you look at the inflation data, the inflation forecast, there's not much point in waiting here, so why not go ahead? So I don't anticipate any problems. And if he gets a little bit of currency weakness out of this, then I think that's perfectly fine. So this will not create any major kind of market reactions. But it does signal to the world that we have kind of turned the corner, that central banks are easing. And then the question will be, where does all this settle in the long term?
And that was BlackRock Vice Chairman Philip Hildebrand speaking exclusively with a colleague, Francine Lacroix. Let's get back to markets. Do a check on HS Tech, in particular. Tech stocks getting a hit in Hong Kong. The Hang Seng Tech Index currently down by more than 4% on U.S. sanctions risk. We know that reports suggesting that the U.S. is probing SMIC for its chip in Huawei phones. The U.S. has also said it is mulling blacklisting a number of chip companies linked to Huawei. That's impacting sentiment. We have HS Tech currently down by more than 4%. Hang Seng Property Index also lower as we count down to some of those property earnings next week, including Country Garden. Property back being a risk to the market. Well, still to come, an Indian opposition leader has been arrested just weeks before national elections. We have the details. Stick around. This is Bloomberg. Welcome back. You're watching India Focus, and India's just starting its trading day. It is off to a red start, negative in line with the rest of the region. The Sensex index down 0.3%. Losses too for the Nifty 100 also down by 0.3%. We've seen a recent correction. How long that will last, that is the question. But some say you may want to buy the dip. They say between now and elections in April, and if global factors are positive, India will continue to grind higher, but not today. Sensex down 0.2%. It is a dollar strength story. The rupee under pressure, down about 0.1%. 83.26 is a level we're looking at right now. Now, Indian opposition leader Arvind Kejriwal has been arrested just weeks before national elections. No details have been given about the arrest. India economy and government reporter Swati Gupta joins us from New Delhi. Swati, what can you tell us about this arrest?
It came came in really last night, and the party has been expecting it for a while. So Arvind Kejriwal is the chief minister of the capital, New Delhi, but he's also the leader of an opposition party that is gaining supporters, and it is slowly increasing its influence in Delhi. Like I said, that they were expecting the arrest for the past few months because the party has seen some of its senior leaders arrested in the last year and a half. The deputy chief minister was arrested about a year ago, and he's still in prison. He's been denied bail repeatedly. And this is expected to lead to protests in Delhi. The party has called for its supporters and its workers to come out and protest on the streets. And they have also said that they have appealed the arrest in the Supreme Court, which is probably going to come up today.
Well, the optics are not great, right? I mean, Congress says now that Modi's trying to cripple it before the elections.
Yeah, just hours before Mr. Kejriwal's arrest, the main opposition party in India, the Congress party, held a press conference, and it had all its senior leaders who, one after the other, spoke about how the Modi government is trying to cripple the opposition. The Congress party had its bank accounts frozen a few weeks ago, and they're alleging that they financially do not have the wherewithal to actually, fight the elections. And it does raise the questions from the opposition parties that if they are provided with a level playing field for the upcoming elections.
Will it dent Modi in any way?
At the moment, Prime Minister Narendra Modi enjoys immense support in India. He is riding high on a growing economy, and at the same time, his Hindu nationalist agenda, which has been bolstered by the inauguration of the temple back in January. So at this point, it does seem likely that he will get a third consecutive term.
Swati, thank you. Our India economy and government reporter Swati Gupta in New Delhi. Well, still to come, why the world's most lucrative cricket tournament in India could bowl investors over. This is Bloomberg. The 17th season of the Indian Premier League starts this Friday, and the event presents investors with big opportunities to cash in on the sport months after India hosted the Cricket World Cup. Bloomberg reporter Satviki Sanjay joins us from Mumbai. Satviki, well, you can expect a spending boom.
Yeah, this is, as usual, cricket is a huge sport in India, and the Indian Premier League, the world's richest cricket tournament, is once again going to present investors, consumers with a huge opportunity. The Cricket World Cup this time also coincides with the Indian elections, and company CEOs, investors, analysts all expect a huge spending boom during the next couple of 2 and 3 months.
So talk to us about the kind of money we're looking at.
Right, yeah. So recently, the Tata Group, one of India's biggest conglomerates, spent almost 300 million securing the sponsorship rights for the IPL over the next 5 years. We also have advertisers and sponsors and investors putting in huge amounts of money into the ad slots. So we're expecting a lot of money to come in for the advertisements. We have big Indian conglomerates. We have the Reliance's Jio Cinema, which is Ambani's media venture, securing the media rights for broadcasting IPL online. So we had them buy these rights last year for $2.7 billion, and we're expecting more money to come in as the season rolls on.
So Vicky can only imagine that will be trickle-down effect on the economy, which is already, growing at an elevated level.
Right, yeah. This, as consumer spending grows, people expect, and economists expect that these couple of next 2-3 months will add to the economy. Consumption is going to go high. A lot of companies, especially food and beverage giants, are going to see a lot of benefit from the next 2-3 months of the IPO along with elections.
Bloomberg reporter Vicky Sanjay in Mumbai, thank you for that. Now to some top stories out of the US. Reddit shares soared 48% in its trading debut as its AI pitch gets a warm reception from investors. The social media platform has a deal with Google, which allows the tech giant to use Reddit content for training AI models. Reddit's COO Jen Wong says she expects the platform's data licensing business to continue to grow.
The Reddit's corpus of data is incredibly valuable, and it gets more valuable because as there's more content that's generated maybe by AI or computers, original human thoughts and ideas increase in value, right? If you think about it, a new car comes out. Who's going to review it? A real-life family of 6 can actually tell you what it's like to drive that car. That's always going to be valuable. And so, whether that shows up in data licensing or in the products that Reddit builds, it is valuable.
Nike tumbled in after hours trading in New York after posting a disappointing sales forecast. The sportswear retailer expects revenue in the first half of next fiscal year to be down low single digits. Nike does expect sales and earnings to grow for the full year, minus the impact of restructuring. Let's get back to markets and see how Bitcoin is doing. That recent rally looks to be losing steam, and the largest crypto may post its worst weekly decline so far this year. Bitcoin down about 10% from its record high, with demand for spot Bitcoin ETFs showing signs of cooling. We're also tracking some of the movers. Meituan, Shenhua, Li Auto, Bilibili. In particular, we're expecting Bilibili down as Alibaba sells $360 million of its stake. And we're seeing losses too for Shenhua Energy, Li Auto, as well as Global X China Cloud Computing on the back of that. In the broader markets, of course, we're seeing weakness in Chinese tech in particular. That's on reports saying that the U.S. is probing SMIC for its chips in Huawei phones, also marking blacklisting a number of chip companies listed linked to Huawei. Take a look where we are in terms of the HSI. It was down as much as 4% now, down by about 3%. And we're seeing CSI 300 index lower by 1.5%. It is a strong dollar story. Weakness in Asian currencies. The rupiah down 0.2%. That is it. From Bloomberg Markets Asia, Daybreak Middle East and Africa is next. Do keep it here with us. This is Bloomberg.